Hi, everyone. This is Jason Burak of Wall Street for Main Street. Welcome back to another Wall Street for Main Street podcast. Today, Mo Dawood and I are joined by a very special guest. Our special guest today is Nolan Watson, former CFO of Silver Wheaton and current CEO of both Sandstorm Gold and Sandstorm Metals and Energy. Thank you very much for joining us here today, Nolan.
Thank you.
We want to start this podcast interview by talking about your company, Sandstorm Gold and Sandstorm Metals and Energy. For the listeners out there that doesn't know much about your company, could you provide a basic overview of what your company does, and also describe the difference in your business model between the two companies? And also, why should people buy your company rather than an SOV or mining company?
Yeah, absolutely. So our two companies, Sandstorm Gold and Sandstorm Metals and Energy, are what we call streaming companies, which means we go out and we take our capital, we give it to mining companies to go build mines or oil and gas properties, and what we get back is a contract that allows us to purchase a certain percentage of their mine production for the entire life of their mine, however long that may go. And we do it at a fixed price. So, for example, on our gold contracts, we might buy gold at $400 an ounce for the entire life of the mine, and our goal is to have the mine run 2, 3, 4, or 5 times longer than we initially thought it would on the day we did the deal. So we get all of that exploration upside for free, and we continue just profiting off of the difference between 400 and whatever the gold price happens to be when we're selling that gold. The difference between Sandstorm Gold and Sandstorm Metals and Energy is you can tell in the names. So Sandstorm Gold, if it's a gold stream, we put it in Sandstorm Gold. And if it's a stream in base metals or bulk commodities or energy, that stream would go in Sandstorm Metals and Energy. So they're two sister companies that run side by the same management team. They're both publicly listed. There's no cross-ownership between the two of them, but we do work together. And at times we actually do joint acquisitions where we may go to a copper gold mine and say, Sandstorm will give you a certain amount of money to go build it, and Sandstorm Metals and Energy will take the copper stream, and Sandstorm Gold will take the gold stream. I think one of the questions you asked was relating to why buy a streaming company or a company like Sandstorm compared to, say, an ETF or an actual mining company. I think to compare ourselves to a mining company, some things that inherently tend to go wrong in the mining industry or when people make investments in mining companies is when they go to build a mine, their capital overruns significantly compared to what they thought it would. Whereas at Sandstorm, the way we do our contracts, we get all of that upside potential, but we don't take the downside risk of capital expenditure overruns, because if they need more money, they have to go back to their shareholders to get that money, and Sandstorm's interest cannot be diluted. And one of the other key factors is operating cost overruns. So mining companies typically will make a projection in terms of what they think they can mine for, and then in reality, when they actually get on the ground, they find out it costs them substantially more than that per ounce or per pound to produce the metal. And if that happens, as long as the mine stays economically robust and they continue to operate it, those types of things don't hurt Sandstorm as well. Because if we contract to buy gold at $400 an ounce, then even if it costs the mining company $700 to produce that ounce, we're still buying it at $400. So the whole point of our business model is to get all of the upside you would get if you invested in a mining company, like exploration upside, like commodity price upside, production rate upside, those types of things, while simultaneously mitigating all of the downside risks that hurt people when they invest in mining companies, like cost overruns.
And your business model, Nolan, I think I've heard you do some other interviews talking about this, but the way you've structured everything is that, the more inflation that's created, especially for the input costs, the more Sandstorm will actually benefit, right?
Yeah, that's actually a very good and salient point, which is if we are fixing our costs of production, and governments out there who have bad balance sheets need quantitative easing and monetary stimulus, which means flooding the economy with newly printed dollars, and that devalues the dollar and causes inflation, then Sandstorm benefits to the extent that metal prices rise with inflation. Normal mining companies will have their costs rise as well, so their gross margin won't actually change. Whereas at Sandstorm, our revenue goes up, our costs stay fixed, and our gross margin actually expands because of the inflation. So inflation is our friend at Sandstorm, and it's something that allows us to make more money than we otherwise thought we would have.
Nolan, I want to continue on that topic. I want your opinion on the global macroeconomic situation here and the inflation versus deflation debate from someone, who actually runs a gold company. And does it really matter that much the way you've structured Sandstorm Gold if there is, inflation or deflation?
Yeah, it really does matter in terms of how we actually structure these agreements, inflation versus deflation. Inflation is significant help to us. Deflation can work in the opposite direction for us. Having said that, I know over the last couple of years there has been some concern about deflation, but the reality is the best cure for deflation is inflation by just printing more money and quantitative easing, and it's something that governments have been very, very good at over the last several thousand years, and particularly over the last few years. And I think the reality is that the situation from a macroeconomic perspective and a global economic perspective is that many of the large governments around the world, the United States included, have gotten themselves into a position where it is not feasible for them to repay their debt by having tax revenue that is higher than their expenditures. It's just not something that's going to happen given the interest costs that they're starting to assume because their debt levels are so high. And realistically, the only way out of it is to try to, through quantitative easing, slowly cause inflation. Their goal will be to keep that inflation in check as much as possible, to have it be a controlled devaluation of their debt, i.e. if they owe a certain number of U.S. dollars in debt and they can reduce the value of a U.S. dollar, then they're effectively reducing the amount of money that they owe in real terms, and their GDP would inflate at the same time. So your debt to GDP ratio drops when you cause that inflation. So I truly do believe that the major governments of the world put themselves in a position where they have to ensure that inflation happens. It's not an option for them anymore.
I think that's a fantastic explanation, Nolan, and I think you've done a good job summarizing what a lot of the mainstream academic economists have suggested the government do, which is something called, financial repression. I think you've done a great job explaining that.
Well, thank you.
Nolan, that's a great point. I mean, I believe what the euro did today with their $1 trillion package for the Euro Bank is going to help gold in the long term. Which probably explain why it went up today in the past few days in anticipation of this. I just wanted to ask you, what made you decide to go into the precious metals industry compared to the other industries as an entrepreneur?
Yeah, well, first of all, I love the mining industry. I think it's a great industry. I've been in it for a number of years now and have been spending most of my time in the industry in precious metals. I do believe that we are in a precious metal bull cycle. We have been for a number of years. I think that will continue for a number of years to come because of the inflationary factors that I just mentioned, and it really is a good place to be. Over the longer term, from a worldwide perspective, I do think that there are a lot of developing countries that are continuing to come online. And even though I'm not overly bullish in the short term or even the medium term, long term, I think energy and to a lesser extent base metals is also a decent place to be, which is why we started up Sandstorm Metals and Energy. I think I'm slightly more bullish on energy, though, than I am on base metals.
That's an interesting point you made on metals and energy. Going back to the mining industry, the miners performed poorly this year. The AQI index is only up around 3% this year. Why do you think that is? Is it because Wall Street hasn't bought the gold story yet? Or is it just, just too much negative connotation related to investing in gold and silver?
Yeah, I think there are a few factors that are going on. One of them is that actual costs of production are going up significantly right now, and it's at the same time that there are economic concerns and people are trying to hold on to their cash and they're being timid about making new investments, which is hurting all equity valuations in a lot of industries, but mining more so than others. And you're having costs go up at the same time, so people's equity is being hurt at the same time their gross margins are being squeezed. And it has hurt, to a lesser extent, the operating companies with free cash flow. The reality is that the vast majority of the mining companies out there are not producing anything as of yet. In fact, they're developing and pushing forward either development projects or exploration projects. And so what happens is when there's significant volatility in the markets, that those companies can't raise equity. And if they can't raise equity, to take a step back, a really good example with one company I'm looking at, they're about a $100 million market cap. They were a $200 million market cap. They need to raise about $400 million to build their mine. And with the volatility in the market, their market cap has decreased down to $150 million. And then everyone started to realize, wait a second, $400 million is a lot of money to raise for a company that is now only $150 million market cap. Maybe this company can't raise the money. If they can't, then their mine's not worth anything. And so their share prices continue to plummet, and they're now well under a $100 million market cap. And you're starting to see that all over the place, which is these companies, if they can't raise the money, their mines aren't worth anything. And you're starting to see the hesitation on the part of the funds to invest in mining companies is creating a self-fulfilling prophecy for all of those companies that don't have any income.
But longer term, Nolan, this is actually more bullish, for gold and silver price, because this means that, less production probably is going to be brought online in the near term, correct?
Yeah, that's absolutely the case. So anytime that you have supply side restrictions, especially compared to or for projects that everyone just assumed were going to be built, and those projects are not going to be built now, then as long as the demand stays reasonably strong, then, you will have strong prices in the future.
Nolan, I wanted to expand a little bit more on your last few points there. I think you did a great job talking about some of the financing issues that are going on in this macroeconomic environment just in the last 6 months. As the Fed took the brakes off the quantitative easing programs here, and during this type of period, I guess we could call this a disinflation period, where the margin requirements are raised on the commodity prices, and the Federal Reserve people come out and say, we're not going to do any stimulus for right now, commodity prices are too high, et cetera, et cetera. So I was wondering how you think this disinflation period of the last few months is really going to affect the junior mining business, and is Sandstorm Gold going to be approached with more or less deals now per month because of this type of situation?
Yeah, whenever central bankers and governments are trying to inflate their way out of problems, they always have the incentive to increase the money supply without actually increasing prices of goods. So it is to their advantage to try to keep the values of commodities down. I don't think that in the long run they're going to be very successful about that, but certainly in the short run, that combined with the volatility that we're seeing out there in the equity markets is certainly hurting a lot of mining companies. I know of a number of companies that were looking at doing a deal with Sandstorm. They decided to potentially go raise equity, and the bankers have just told them, sorry, we're closed for business right now. You can't raise any equity. And so Sandstorm Gold and Sandstorm Metals and Energy are being flooded right now with a number of opportunities. But at the same time, we are being very sparing with our cash too, because we realize that the fundamentals aren't that good out there. I, again, am fairly bearish in the medium term, and we're going to pick our spots and make sure we do some really smart deals for our investors.
Nolan, I wanted to ask you, does the price of gold influence you on making a decision to do another deal? Like a few months ago, gold was near 1900, and then it dipped back down to 1600. So do you look at the gold price when you make a deal, or that's not a big factor to you?
Well, the gold price is always relevant whenever we're doing deals. The way we look at it, we're always trying to find out what we believe the long-term price of gold is, and then make sure that with that view, we are doing a really intelligent business deal. And the change in gold price as it goes up and down really does affect the dynamics of a deal, because our counterparties, their expectations are changing as well. So it's really easy to get deals done in stable price environments. It's more challenging to get things done when the price is going up or the price is going down, just because expectations on either side of the table change. And so our focus is always on just being pragmatic, ensuring that we're getting a good deal with a long-term value. So we're not too worried if gold goes up $50 or down $50, but when it does make major moves up or down $200 or $300, we definitely do pay attention to that.
Yeah, and Nolan, you touched on a great point there about price stability, and that's exactly, what we don't have right now in the business environment is we don't have stable prices where people can project out, their cash flows for a larger investment. So, and I think a large part of that is the fact that we have, paper fiat currencies that are just fluctuating, so volatilely, and that's where I think the majority of the problem starts there, is the fact that if we had stable prices right now, there is plenty of cash from these larger corporations all around the world where larger investments could be made. It's just, some of them are scared for many reasons, really, taxing regulations, but also because of the paper fiat currency instability.
Yeah, I would absolutely agree with that. The one fundamental key to getting a business deal done, and I've spent almost my entire career in mergers and acquisitions, is having expectations on either side match up. And that's one of the reasons that inflation is so damaging for an economy, because you don't know if inflation next year is going to be, in these hyperinflationary economies, if it's going to be 50% or 200% or 10%. And because of that, you can't enter into long-term contracts. And if you can't enter into long-term contracts, you can't really do business. So you're absolutely right about people being hesitant to hand over money to companies to go build mines in an environment where they don't know what to expect 3 years from now.
That's a great point, Nolan. And I want to get your outlook on the mining sector beyond 2011. I spoke to Morgan last week, and he told me in a podcast interview that the bull market we had in the 70s, 80s is only a warm-up to what we're going to have in the near future. So I want to ask you, what are your outlook on the mining sector going forward? Do you expect a big boom coming up for the mining sector, where we get just big increases in the stock prices and everybody on Wall Street start paying attention to that industry?
I think it really depends on which time horizon you're talking about, in my view. If you're talking about a 20-year time horizon, I am of the belief that the world is still going through an unprecedented transformation in terms of number of people that are going from living in third world conditions to living in first world conditions. It's happening faster than it's ever happened before in the face of the earth. And these types of demographic shifts, it's not just China. It's happening in countries all over the world. And these types of demographic shifts don't happen over 2 years or 3 years or 4 years. They happen over 15 years or 20 years or 30 years. And so I'm very bullish on the outlook for commodities and for mining for basically the next generation. And I would give the caveat, though, that I do think in the short to medium term there's unfortunately going to be a reckoning some point in time where the governments, be it the United States or be it Italy or be it Spain or whoever starts falling first, is going to have some fundamental issues that they need to deal with, and their economies are going to suffer as a result. And so I do think that we are in for some short to medium term pain.
Great point. And going back to the government, do you believe or do you think that the government will eventually confiscate people that own gold? And if they do you believe that will be bullish for the mining industry? Because back when they confiscated gold during the Great Depression, when they had to dump their physical gold shares, it was actually bullish for the mining company, because then they just took them in and bought the stocks. So do you believe that could be the case again in the future?
Well, I know the U.S. government has done it in the past. I think that it's unlikely, in my view, that that's going to be something that goes forward. I really just don't see the U.S. government confiscating gold. So much of it is now held around the world and held outside of the U.S., and there's really significantly reduced capacity for the U.S. government to make policy decisions like that affect the world, because they are not as powerful economically worldwide as they once were. And the price of gold, unfortunately, is not going to be set by the U.S. government. They're just no longer powerful enough from an economic perspective to do things like that. So I think it's unlikely these days.
Great point there. And I want to go talk about your former company, Wheaton. Now, one of the questions many people have is, what is the difference between your model and Wheaton's model?
On the Sandstorm Gold side of things, I would say our model is very, very similar to theirs. There really aren't a lot of substantial differences. We have made some differences on the metals and energy side of the business. So Sandstorm Metals and Energy has negotiated in virtually all of the deals that they've done something that we call minimum cash flow guarantees, which are clauses in the contract that say regardless of what the commodity price is, regardless of what the production is, you have to guarantee that Sandstorm will get minimum cash flows in each of these years. And those numbers add up to what we paid them. So the goal being, regardless of production, regardless of metal price, we will break even within a certain number of years for our payback purposes, and then the rest is upside and gravy to us. So it's just an extra step forward in the risk mitigation side of the business, and it's something that we're putting a lot of emphasis on, and we're going to keep trying to do.
Okay, and as you know, the CEO of Silver Wheaton, the former CEO, Peter Barnes, stepped down. A lot of people were concerned that Silver Wheaton won't able to deliver without him. What are your view of the new CEO for Silver Wheaton?
Yeah, I mean, Peter Barnes was a great guy. I spent a lot of time working with him, a number of years working with him, in fact, and have a lot of respect for him and his ability and his wisdom in business. The new CEO of Silver Wheaton is a guy by the name of Randy Smallwood, and he was part of that senior team at Silver Wheaton right from the very beginning. And he is an unbelievably experienced guy in the mining industry. He is a geologic engineer who's got a fantastic business head for understanding where upside potential is, where downside risk is, and he's one of the few technical guys in my mind who's made a fantastic leap from technical person to exceptional business person. So I've got a lot of faith in Randy. I think he's going to do a really good job at Silver Wheaton, and I think the shareholders there are in good hands.
Yeah, no, and I definitely think all these types of business models are really great. You know, you guys can cash flow very quickly. You can grow the company very quickly. You can diversify your asset base very quickly. And, you know, eventually Sandstorm Gold will probably be paying out a dividend in X number of years, and you guys are still going to have growth on top of that.
Yeah, and that's absolutely the key. In the early years, we have to raise capital to go invest it, and eventually we get to the point where we don't have to raise capital anymore, and we're just doing investments with cash flow from operations. And then finally, the end goal is to have so much cash flow that you can't invest it all, and you start returning it to shareholders in the form of good dividends.
Exactly, Nolan. I have one final question here for me, at least on mine, and then Mo can wrap up his part of the interview. What do you think the likelihood is, Nolan, or probability, if you want to give like a percentage? Do you think that we're in for maybe a repeat of 2008 with the market crash, you know, commodities just getting destroyed, where we had, you know, copper price just crash and stuff like that? And how would Sandstorm be affected? How would both Sandstorms be affected by that? And can you talk about the cash positions and how you would, you know, navigate through that type of storm?
Yeah, 2008 is what I would describe as a deep V recession, where it went down really fast and went back up really fast. I think that although I'm not one of the people that expects it to happen in the next 3 to 6 months, probably not even in the next 9 months, but sometime in the next 2 years or so, I do expect another recession. I expect this one to be worse than the last one, and I expect it to take a lot longer to pull out of than the last one. And from a Sandstorm perspective, we're managing our business very carefully as a result of that. So both of our companies are sitting on cash. Sandstorm Gold is significantly cash flow positive right now. I expect Sandstorm Metals and Energy to be fairly good from a cash flow positive perspective starting next year. And the goal is just not to do anything that would result in us having to issue equity. In my mind, that is the number one risk of investing in a mining company these days, is investing in a mining company, having to have a recession, and having that company have to raise equity at some point because they've either taken on too much debt or because they have run out of money. Because what happens is if you go into a recession and share prices get crushed, as long as the mining company does the right things during that period of time, they can recover fully on the coming out of that side. If they have to raise significant amounts of money after their share price has been crushed, then unfortunately they're going to be resetting their share price to that new low price, and they won't recover fully, ever. And so the key is investing in companies that are putting themselves in their balance sheets and positions where they'll be cash flow positive, where they won't have to go and raise equity if their share price is bad. And so we're running Sandstorm that way, and that is the position we're going to make sure Sandstorm stays in.
And one final question on my end. Many of the current investors in Sandstorm Gold and Metals and Energy is wondering, do we expect the company to do another deal before the end of the year?
Well, we're working on deals all of the time. There's one thing that I always promise to investors, which is that we're going to do the smartest deals that we see, and we're not going to rush to deals if we don't think they're the right ones. So both Sandstorm Metals and Energy and Sandstorm Gold are working on deals right now. They're working on deals that we think are good, but we're going through the transactions. We're doing our due diligence. And in terms of actual timing, unfortunately, sometimes that is out of our hands and in the hands of our partner companies. So I won't make a prediction in terms of timing, but I will certainly, and I'm confident in making the prediction that we will be doing deals in the near future.
Just out of curiosity, Nolan, do you get about 100 deals brought to you more or less a month?
Yeah, I'm probably not the best person to ask in terms of the exact number of deals that are brought to us. I've built up a really good team that filters through them, and all of the deals that get brought to us, they don't make it to me unless they're actually good deals. And so I'm not quite sure if it's 100 or a month or 50 a month, but it is a very significant number. And I would say the number that actually gets to me in terms of things that our staff think are good and are worth working on is certainly, call it 20 a month.
Oh, that's great. A lot of people think highly of you and your company, and we have great hope for you guys.
And we're both shareholders, for
exactly.
full disclosure.
Yes, we are shareholders of both companies, just for the audience out there. Nolan, for future investors that want to invest in your company, can you give out your website and your ticker symbol on the Canadian and U.S. exchange?
Yeah, our ticker symbol in Canada is SSL.V for Sandstorm Gold, and for Sandstorm Metals and Energy, it's SND.V. Our website is www.sandstormltd.com, and that will take you to the website for both companies. And in the U.S., I'm not supposed to market our U.S. ticker symbols because we're not officially SEC registered, but I will let people look that up on Google.
We understand. Well, thank you for coming on our podcast, Nolan, and we hope to talk to you in the future again.
That's great. Well, thank you very much. I appreciate it.
Thank you, Nolan.